And there you have it. The markets are officially closed on this Wednesday, December 11th. Welcome, investors and traders. This is the Midweek Report. I'm AJ Monte, and this is a 3-month daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As you can see here, we have a long stretch of red showing up, 5 red candles in a row. And yesterday, we had an increase in volume on that down candle, but today we had a slight drop. Now, it wouldn't surprise me at all to see a little bit of a bounce off of that moving average and then another downturn, as we often talk about the ABCD pattern, right? That's when you have A to B, it pivots up from B, pivots lower from C, to ultimately a lower D. And that's right where my price target is for the diamonds. You recall that back here we had a 2-part forecast. It blew through my upside target. We're still waiting for it to hit the downside target. We also have a gap below the market down here that will most likely act as a price magnet. So keep an eye on that. We're having a very interesting pattern show up over the last 5 trading days. Take a look at the 5-minute chart and you'll see what I'm talking about here. We have a pattern where towards the end of each day, we're getting a sell-off in the Dow. It's pretty noticeable. Every single day, including today, we've had that sell-off. Whether or not that's going to persist throughout the rest of the week, we don't know. But look at that sell-off right here in the last half hour. It was very well pronounced. We saw that increase in volume in the last 5 minutes down there. So my downside target is still in place. I have no reason to move it other than to let you know that we'll probably zigzag our way down through that ABCD pattern. Looking at IWM, keep in mind that while the Russell is pulling back and getting ever so close to my downside target here at 233.20, the upside target was hit, we stalled, pivoted lower. You could see that the oscillators are in oversold territory, at least the stochastic is. We still have this open gap down below the market where that too will act as a price magnet. But as we come towards the end of December, you might want to pay attention to what's known as the January effect. What happens there is we have large caps get sold off and a lot of the money managers and fund managers start moving into small caps. That is a very regular cycle that follows the Santa Claus rally or the year-end rally. So keep an eye on that. We'll probably see continued pressure on the Dow, possibly some relief and money moving into IWM, but it's still too early to tell. Take a look at the monthly chart on IWM. You'll see that we're forming an M top here. I pointed this out to our members as we were rolling some of our positions today. This is the M. Here's the bottom of the M. And you trade that very much like a head and shoulders. So if we break out of that support level at the bottom of the M, you would take the height of the pattern and attach that to the breakout point, and there you go. You're right into the March 2020 lows at that point. Don't want to get ahead of ourselves here. That is a long way off, but it certainly looks like a well-pronounced M-top, and so keep an eye on that because M-tops, head and shoulders patterns, cup and handles are all followed by swing traders, and they react to those. In addition to that, if you look at IWM, we're very close here to forming a bearish harami. We saw one back here. We saw a bearish harami back here. Here's a bearish engulfing, bearish engulfing, bearish engulfing, all in a row at that top back in the end of 2021. And again, I still think we're in that topping pattern that many people ask me about. I don't talk about it too much because it doesn't make sense to talk about it every single week when you're looking at the monthly chart. But that is most definitely a top forming right there. M-tops, double tops are more or less synonymous. So moving right along to QQQ, still showing a lot of strength here in tech. We have an increase in volume on the way up We could see higher prices towards the end of the week. I'm not going to draw any trend lines on that, at least not yet, not till Friday. That's when I draw my diagonal lines. But I would not be surprised if we see a continuation in this rally into tomorrow and Friday. And then we'll have to see what happens as we get closer to expiration Friday, which is Friday, December 20th. That will most likely have an impact on the price action, as option traders do often move price through gamma trading and exercising of their options and such. So that is QQQ. You know, if you look at the monthly chart on the Qs here, I mean, it's still talking vertical price moving here, parabolic move. And so with no correction whatsoever, this is just getting out of control. I mean, there's a lot of odd things happening in the markets, in the political world, in the geopolitical world, even in New York and New Jersey. We're seeing this craziness of the drones. I mean, have you heard this news? I mean, the Department of Defense is not even explaining this to the general public. They're just kind of writing this off. I mean, New York City police and the Pittsburgh police could find the shooter who killed the CEO of United Health, but they can't find the operator of these drones. I mean, that's absolutely ridiculous. There's something going on here that's very odd. I'm not even going to go down that road. I'm just explaining to you that we're seeing so many odd things that you can't even explain. But when things break in the market, I think it will be shocking. I will persist in that message that when this market breaks, it's going to be very ugly. So while we're still making money, this is one of our best months we've had all year with regard to credits and rolling our positions. I'll talk more about that on Friday. So it's just been a really, really good month for our members. And hopefully our members will shout out in the comments field to inform everyone what's going on, that you can make money up, down, and sideways. It really doesn't matter when you're trading options. Here's the monthly chart of SPY. You can see how vertical this has gone. Notice down below, we still have a massive negative divergence in the CCI. That's when you have higher price highs, but lower highs on the oscillators. We saw that right into the rally up until 2021, the end of 2021, and then the market dumped. This whole thing here down below in these oscillators are repeating like a mirror image almost. So be very careful of any new long positions. I'm not telling you not to take any new longs, but if you're trading options, have a great time. It's absolute field day we're having with all the premium that's out there. So getting back to the price target on SPY, you can see on the daily chart here, I still have that downside target. I'm keeping that in place. You can see that we do have a drop in volume today as we're reaching that high. Volume is a leading indicator. It tells us the motivation level of the buyers or the sellers. So if the volume is dropping on the way up, it's telling us that the buyers are losing momentum, or they're losing their shares. They're running into fewer opportunities to sell because they're selling out of their inventory. Once that happens and the sellers start recognizing that the buyers are running out of buying power, they will start selling or even shorting into this market. And that's what I'm expecting to see, especially with SPY. Looking at the VIX, you can see that we had a down candle today at that moving average. We see the CCI pivoting lower. We might go a little bit lower on the VIX by the end of this week. But again, we still have this open gap that I guarantee will fill. We just don't know when. And the reason for that is, I repeat always, that the VIX is an oscillating index. It's not a stock. It oscillates between ranges. And so eventually it will go up there. And you got to keep an eye on that as well. If you look at the long-term chart of the VIX, you know, people always question us. We're approaching, I have to make sure I use the words correctly so everyone understands me. We're approaching the historic average low. There we go. Put it that way. We're approaching the average low, historic average lows of the VIX. And you can see that periodically we get these spikes. And whenever those spikes occur, what happens to the general market, especially the S&P? It dumps. So they're inversely related. And if you think that you're just going to see an endless rally going on here without any kind of correction, or at least a pullback in some sort of profit-taking move, then you're most likely going to get caught by being overly optimistic. So that's my caution flag that I'm raising for you. Remember, tonight is Wednesday night, rapid fire stock analysis. I will go over at least 60 stocks in 60 minutes. Last time we had our session, I did 70 stocks in 75 minutes. We went 15 minutes over to make up for the Thanksgiving break. And so if you want to plug into that, you have a 15-day free trial, if you like. You could plug in, be a fly on the wall, listen to my webinars, listen to all the recordings, and it won't cost you a single penny. I give you my word, we do not take credit cards for that. We don't try to capture data from people. If you like what you see, you stick around. If you don't, we just part as friends, and you get 15 free days of our service, and you'll get to see how we're making money in this very crazy market. So with that, I will talk to you on Friday. Have a good rest of the week, and I'll talk to you on the next weekly market report. So long.